I don't care how long this federal shutdown goes, we are not coming up with theme music and new graphics. This is not cable news. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Wall Street starting the week on a down note. The Dow and S&P 500 both in the loss column just one day before earnings season officially kicks off. Joining me in studio today, Jason Moser and Bill Barker. Guys, our top story, the shutdown of the federal government officially enters week 2 in a few hours. While investors have largely ignored the shutdown, many on Wall Street are starting to wonder if the debt ceiling will be raised on October 17th. We saw increased volatility today, the VIX up 10%. How bad would it be if we didn't raise the debt ceiling?
I guess one way to look at it is the risk-reward equation that some of the politicians are considering. On the one hand, the risks are that we're no longer the world's strongest currency and we become a laughingstock, and the rewards are zero. So that's the equation they're wrestling with right
No
now.
reward whatsoever?
There's no reward to not increasing the debt ceiling.
Some people are worried. One who is not Ray McDaniel, the CEO of Moody's. Obviously, they would have a hand in figuring out whether or not to downgrade the U.S. if that comes to pass. Are you worried?
Well, I mean, I'm not worried yet, but I think every day that we get closer to it, I think that we'll see behavior in the market and headlines leading to more people at least being concerned. Now, while it's hard for me to believe they would just let this go by, Bill hit it spot on there. There is no upside to this whatsoever. And I think anybody with any sort of rational thought in their head can see that. And so while I bet you they'll take this thing down to the line and we'll see some volatility leading up to it, I imagine they'll still reach a solution here before the time runs out.
Yeah, Congress is really great about getting right up to the deadline. So a week from now, are we still going to be talking about this? Because a week from now, we're still 3 days before the debt ceiling deadline.
We could be. I mean, you've got a number of people who have something to gain out of this, and what that is publicity, and that's something that they're interested in. Ultimately, they don't have enough cards. I think that Boehner has indicated that he's not going to let this go that far, and you know, he will extract at least something cosmetic along the way, and then we'll have a deal.
All right, from the public sector to the private sector, let's get to some of the day's movers and shakers. Apple getting an analyst upgrade from Jeffries. The firm put a price target of $600 on the stock. That was the price about a year ago.
Yeah, and I mean, I think what's concerned us with Apple for a while now is sort of that gross margin line. It's been coming down here steadily as they've had to, compete a little bit more on price. But I think Jeffries maybe got some boots on the ground in China. Felt like they had some positive reports from some Chinese suppliers there that are easing back on pricing. So they're looking for some gross margin expansion over the next couple of years, and therefore they raised the price target. I mean, it makes sense. Apple's still, far and away the leader out there with 450, close to $500 billion company. I think we can still expect big things down the pipe from them.
Cooper Tire taking a hit after its acquisition by rival Apollo Tyres is up in the air. On Friday, Cooper sued Apollo to force completion of the $2.5 billion deal. That seems like a rough way to start a marriage.
Well, the lawsuits have been right there right from the beginning on this. Of course, when the deal was announced, the usual plethora of lawyers showed up and started suing or threatening to sue Cooper for not getting a high enough price. Now it looks like the price is too high for the deal to go through. Cooper's scared about that, is trying to threaten suit and is got a suit going to make the deal go forward. But really, if the price is not right, I think they're going to have a tough time getting the money from their purchaser.
There's no downside to being a corporate lawyer, is there?
Well,
we could come up with one or two.
I could say something in response to that.
Let's move along. Liquidity Services down big today. The online marketplace for surplus goods was just downgraded by Bank of America. Is this the ripple effect of the shutdown?
It very well could be. I mean, while we were going from the public sector back to the private sector here, Liquidity actually works a little bit in that public sector as well. They run this online auction house for government surplus and salvage and stuff like that. And so they generate a lot of their revenues from a couple of big contracts with the Department of Defense. So anytime you see any government shutdown like this, any question, any uncertainty, unfortunately, Liquidity takes a little bit of a hit there, but it's still a really well-run company in a very sort of niche market there. So this could actually represent a decent buying opportunity.
And finally, after the stock more than doubled on Friday's IPO, shares of Potbelly's up again today. Really? The sandwich shop? I don't know. I mean, people saying this is the next Chipotle. It certainly seems to be priced like the next Chipotle.
I think that's the key, is to get the next fill in the blank, and the blank needs to be something really awesome like Chipotle, and then you get a few free days of your stock moving up. But no, it's the sandwich shop, and there are other sandwich shops out there. Potbelly's serves a good sandwich. I know you probably don't agree.
I'm not a big fan. I like the milkshakes. I'm not a fan of the sandwiches.
You know, I think right now what we're seeing is not enough supply and a little bit too much demand. I imagine that at some point we'll see more shares of Potbelly on the market.
All right, that's going to do it for Monday's action. Let's look ahead to the rest of the week. Give me a stock I can put on my watch list.
Yeah, so Fastenal reports on Wednesday. They work in that exciting, sexy industry of maintenance, repair, and operations.
Woo.
Control your excitement, Chris. But it has been a really tough year for Fastenal, for MSC Industrial Direct, and these companies because industrial activity has been so light, and that's what these guys really do. So I think the earnings call on Wednesday will give us more insight as to how Fastenal is doing and what we can expect from MSC down the road.
What about you?
Fastenal doesn't know a tough year compared to Yum Brands, which has had a really tough year in China with KFC. It's had a scandal with one of its chicken suppliers, and then also the return of a new strain of avian flu hit it just as it was beginning to gain a little bit of customer action back, getting over the chicken supply issue. So same-store sales have been down 20% or more at various times over the last year. They report tomorrow, and we'll see what the latest quarter has done for them. Their other brands are doing a little better in China and definitely in the U.S., so a lot of moving parts there.
All right, for Bill Barker and Jason Moser, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.